Well, good morning. Welcome. You're watching Market Cafe on ET Now. I am Harsh Saita. With me is Snehi Shah. This is that 1 hour where we take you through all that you've missed post-trade yesterday. So we'll give you a quick roundup on everything that's happened in global markets as well as in our own Indian markets with regard to corporate announcements as well as stocks in news and stocks you need to keep on your radar as well as what brokerages are keeping on their radar. But very quickly speaking, Snehi, we had the US as well as global markets in a mixed state yesterday. Talk to us about that.
Absolutely, Harsh. Good morning to you and wishing all our viewers also a very happy Tuesday morning. Let's take a look at the global handover coming in, and let's start with the US markets because stock futures hovered near the flat line on Monday evening, but we did see some positivity as Wall Street reversed its losses. Stocks largely whipsawed during regular trading hours with all three major indices ending the day with modest gains. The S&P 500 added almost 0.4%. While the Nasdaq advanced 0.4% as well. The 30 stock Dow inched higher by 0.2%. So, gains, modest gains, but gains nonetheless. All three of the indexes snapped 4-day losing streak. So that's a reversal coming in on Wall Street. Nevertheless, stocks are still on pace to end September lower, a month that is already known as being historically weak for equities. Investors will also look for progress in Washington as lawmakers hope to avert a government shutdown that could take place as early as the 1st of October if Congress doesn't agree on a spending bill. On the economic data front, investors will keep an eye out Tuesday for August's final building permits report before the bell, as well as new home sales data for last month later this morning. The conference's board consumer confidence report for September is also due. So, this is largely what America is looking like. US markets, Wall Street doing pretty well. Modest gains, but gains nonetheless, and a reversal for the indexes in the US. Shifting focus to Europe then, European markets closed lower on Monday as investors reflected on a spate of central bank decisions last week and the prospect of higher for longer interest rates. The pan-European stock 600 index ended lower with cuts of almost 0.6%. With major bosses and almost all sectors in the negative territory. Travel and leisure stocks led losses with a 3% decline, followed by household goods, which dropped 2%. So, Harsh, globally, when we look at it globally, US coming in slightly positive, but Europe in the red nonetheless.
Well, yes, absolutely. And US bond yields going up. You're also seeing German bond yields go up. And that really led to European indices in the decline, in the retreat. And let's quickly talk about commodities. On the crude front, what we're seeing largely is the whipsaw continues. We did see Russia pull back on crude export. Now, what we've been told is that Russia has approved certain changes to its fuel export ban. They've lifted certain restrictions, and therefore what's happened with crude is it's fallen a wee bit. We're seeing just sub 90 levels on WTI, and on Brent we're seeing $93 a barrel. That's where we're at where crude is concerned. Gold absolutely subdued after on the back of what we're seeing in terms of the Federal Reserve commentary post that FOMC meet. So therefore you're seeing gold well below the $1935 odd an ounce. Largely that's where gold is at. So that's where we're placed where commodities are concerned. Bond yields, the US 10-year bond yield must be marked out 4.56%, of course, the highest since 2007 on the US 10-year bond yield. As some of the marquee investors globally, including the likes of Warren Buffett, always says, bond yields act as gravity on stocks, and therefore you must watch out for what bond yields are really doing. Interesting times at the moment, Snehi.
Absolutely, Harsh. So we will keep an eye out on where bond yields are taking us going ahead. But let's also take a look at all the important events that you need to keep on your radar for this Tuesday morning. And let's start with all the global cues then. And on the US front, you've got the US Conference Board Consumer Confidence coming in. So that's an important metric to watch out for. Keep an eye out for that as well. Followed by that, today is the Nifty financial expiry. Remember, that happens on the last Tuesday of every month, which happens to be today. So today is a Nifty financial expiry as well. When we look at annual general meetings, then you've got a bunch of companies hosting their AGMs today, the likes of Tata Power, PVR Inox, Glenmark Life, as well as Edelweiss. So all of these AGMs also will be in focus, and the stocks will be in focus on the back of these meetings as well. When it comes to the primary markets, September 26th, which is today, Manoj Vaibhav Gems and Jewelers will close. This IPO will close for subscription. So if you want to subscribe to it, today is the last day to do so. In terms of other events, then we're getting word of the Bengaluru Bandh that's coming in today on the back of that Kaveri water clash with Tamil Nadu, and the External Affairs Minister will address the UN General Assembly today. So lots of cues to watch out for in today's trade, Harsh.
Well, yes, and on to some global stories. Word of caution coming in from Moody's as the US central government shutdown looms. The credit rating agency warns that this could be credit negative for the US sovereign. Interestingly, Moodys is the only one of the three major credit rating agencies to assign the US the top rating of AAA. Fitch recently downgraded the US rating amid the debt ceiling debate. The S&P had already downgraded the US in 2011.
Well, worries for Wall Street don't end here because inflation above Fed's 2% target continues to be the greater risk than the central bank's tightening measures slowing the economy, says Chicago Fed President Austin Goolsbee. The discussion will now be around how long they need to hold rates at the peak instead of how much more they're going to raise the rates, he added.
Right, shifting gears. Writers in Bollywood finally seeing some respite after the Writers Guild and studios inked a preliminary labor agreement. Talks between the Writers Guild of America and the Alliance of Motion Picture and TV Producers resumed last week after months of starts and stops, ultimately leading to a tentative deal that would end the ongoing writer strike.
And after the huge success of generative AI platforms like ChatGPT, tech giant Amazon is also jumping in to make its presence felt. It is investing as much as $4 billion in AI startup Anthropic, according to reports. Anthropic will use Amazon's data centers, cloud computing platform, as well as AI chips. The company had already announced it would enhance its voice assistant Alexa with generative AI, which would allow users to have smoother conversations with Alexa.
Right, centering focus towards news flow from China, HSBC has gone ahead and released a fresh economic forecast for China. It has lowered forecasts to 4.9% in 2023 versus a 5% figure earlier. For 2024, it has lowered forecast to 4.6%, citing that it expects the country's central bank to loosen policy stance with further cuts to boost interest rates.
Staying with China then, worries continue to mount for the country's property market after the embattled Evergrande announced that it was unable to issue new debt. Shares of the property developer plummeted by 21%, logging its largest single-day decline since last month. The company, remember, has shed more than a fifth of their value through this decline.
Right, we'll take a quick break on this show. Of course, more on the other side. Stay tuned.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Let's quickly take stock of how the Asian Pacific markets have opened up this morning, and they're largely in the red as investors look toward inflation data from across the region this week. Let's take a look at KOSPI because the sharpest cuts are coming in for KOSPI. KOSPI is 1% lower in the red right now as we speak. Now, Singapore and Australia are also expected to report inflation figures for August this week, while Japan will release inflation data for the Tokyo region as well. So, let's take a look at Nikkei. Nikkei is down 0.7%. Now, remember, the yen has fallen to an 11-month low versus the dollar. So you can see the impact of that on yen. Followed by that, Australia's index down almost 0.5%. That's ASX 200 for you on your screen. Let's also take a look at what Hang Seng is doing. Hang Seng also down 0.7%. Well, it's red across the Asian markets, and also taking stock of Shanghai. Shanghai is pretty flat in trade, but holding on to the green by the skin of its teeth. But well, not doing much over there as well. Let's see if it continues to hold on and be in the green largely. But US futures also coming in largely flat. So this is what the Asian markets are doing. Shanghai showing some glimmer of positivity, but other than that, all of these markets are largely in the red. GIFT Nifty also you've got at that 19,653 levels. So well, let's see how that pans out for our markets, Harsh.
Yeah, absolutely, indicating a cut of 1/3% or thereabouts after what was largely as flat as possible close yesterday. Let's quickly move on. We have with us on this or on the next show, which is the market. We have at 9:20 a.m. Just quickly taking you all through the rundown. We have Safir Anand on Beat the Street, and after that we have at 9:40 B. Thiagarajan, who is the MD at Blue Star. He's going to talk to us about demand trends within that segment. Quickly moving on, at 10:20 a.m. we have Ashish Keher, who's the MD and CEO at Nuvama Wealth. Mind you, there's a listing. Nuvama Wealth gets listed today, first day of listing, of course. And thereafter, immediately, we have Siddharth Pai, who's the founding partner at 314 Capital at 10:30 a.m., which is with regard to startups. Well, and it's that time of the show where we take you to the news for the hearing impaired. We'll meet you after this very short break.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. This is ET Now with me, Snehi Shah. Now, big boy Reliance, with its market cap of a whopping 15.8 lakh crore rupees, falls for the fifth straight session. In fact, it is the only nifty stock in the oversold zone. So what is ailing Reliance, and what's causing this downfall? Somit is joining in to decode it for us. Good morning, Somit. Take it away.
Well, India's most valued company, that is Reliance Industries, with a market capitalization close to 16 lakh crore, is the only nifty company to be in the oversold zone. Now, if you see the RSI of Reliance Industries, that is below 30, and this is for the first time since March 2023 that we are seeing such kind of an move when it comes to Reliance Industries. Now, the stock has been down for the fifth consecutive session, and on a monthly basis, if you see, for 2 consecutive months, the stock has been underperforming, has been giving negative returns. Now, on a YTD basis, if you see, the stock has underperformed the Indian benchmark, that is Nifty 50. RL has moved up by only 0.9% on a YTD basis, while Nifty has gained around 8%. Now, how has the stock reacted in the past whenever it has, when its RSI has been in the oversold zone? Now, in the last 5 years, RSI has dropped below 30 close to 8 times, but every time after a brief consolidation, if you see, the stock has managed to post gains post a brief consolidation. Now, what has been ailing the share prices of Reliance Industries currently? Firstly, is the recent planned shutdown announcement that had come in from the company's side. Morgan Stanley believes that could impact the company's earnings by around 1% odd. That Street was expecting some demerger announcement to come in the AGM when it comes to the retail and the telecom business, but there was no announcement on that front. So that was one of the disappointment from shareholders' point of view. Apart from that, the O2C earnings are expected to be weak because Singapore gross refining margins have dropped from $15 to around $9 odd, while the margins when it comes to the petrochemical business has also been on the weaker side for Reliance Industries owing to tepid China demand that we are seeing. Now, in past, if you see, the Reliance Industries had benefited because of higher discounted crude coming in from Russia, but now that discount has also narrowed, which could also weigh on the company's earnings going forward. And lastly, apart from this, if you see, the telecom business has not seen any tariff hike yet so far, and that has been lagging the growth for the telecom business. Without tariff hike, the growth in this business has been around 2% on an average. So tariff hike is the most important trigger when it comes to the telecom business, is yet to happen for Reliance Industries. However, what could be the key triggers going forward? Firstly, when it comes to the retail business, it could be the festive boost that could boost the sales of the retail segment. Apart from that, Jio Air Fiber launch could also boost the broadband adoption in the country, which could be a new growth trigger for the telecom business. Also, the new energy offers a strong growth optionality going forward. Now, we do remember that after a period of long capital expenditure, company has always given a strong earnings growth, and new energy could provide that earnings growth going forward when it comes to Reliance Industries. Apart from that, the option to demerge the retail and telecom business always lies with the company. However, the company has not adopted to do the same currently, but going forward it can do it. And lastly, the valuations. Now, valuations are very attractive when it comes to Reliance Industries. The 12-month forward EV to EBITDA stands at close to 10.7 times, while the 5-year average EV to EBITDA of the company stands at close to 12.2 times. So valuations at this moment are cheap when it comes to Reliance Industries.
All right, Swami, thanks so much for taking us through that and breaking down for us what's ailing Reliance Industries as well as its stock price. But continue to stay with us because Strides Pharma Science is spinning off its CDMO business along with the soft gelatin unit into an entity called OneSource. So, Swami, take us through how the shareholding structure will change post this restructuring.
Well, if you see, the Strides has announced that Stelis restructuring to create a global CDMO major. Now, Strides currently owns around 33% stake in this biological CDMO business, Stelis, and the proposed restructuring works like this. The softgel, which is the CDMO business owned by Strides, and injectable manufacturing business, which is held by the promoter, will actually be merged into Stelis going forward, and the resultant Stelis business becomes now a global CDMO major spanning biologics, softgels and injectables, which will be called as OneSource going forward. Now, this business will be demerged and listed separately on the stock exchanges, and this is expected to happen over the next 12 to 15 months. Now, the ratio that on which the Strides shareholder would get share is for every 2 shares that they hold in Strides, they'll get 1 share of OneSource, which will be the new listed entity. Now, as per DAMCAP, they're estimating Strides shareholder to own close to 42% of OneSource equity on listing. Now, how does it help a Strides shareholder? Now, this is a good value unlocking that we're seeing when it comes to the Stelis business. At present, market has not been assigning any meaningful value when it comes to the Stelis stake, and as per fair valuation that the company has undertaken, the value of this unit could be around 364 rupees per share. Now, what is the growth outlook when it comes to the OneSource business? Now, OneSource entity is expected to do a revenue of close to 180 to 200 million US dollars with a margin of around 30% and going forward this margin could expand to around 35% by FY26 onwards. Now, OneSource has also had potential to double its revenue by FY27 and FY28. Now, based on these numbers, DAM says that the EBITDA possibility for OneSource in FY26 could be anywhere between 80 to 90 million US dollars, which gives us a value of close to 1.6 to 1.8 billion US dollars when it comes to OneSource, valuing it at 20 times if FY26 EBITDA, which gives a per share value of close to 650 to 750 rupees per share over the next 2 years, which means that at current market price of Strides, the shareholders of Strides would be getting OneSource free of cost, and hence this value unlocking is expected to be a good beneficiary for the shareholder as per DAMCAP.
All right, thanks Amit for breaking that down for us and taking us through that. Well, Strides will be in focus today, but let's get a move on. And ET Now got into an exclusive chat with the Chief Business Development Officer of NSE, Sri Ramakrishnan. He says that the NSE is batting for extended trading hours and they had sent a letter to SEBI with recommendations a couple of weeks ago. Listen in to what he had to say.
No, we submitted a request, a proposal a couple of weeks back. I don't remember the exact date, but very much in this month. The idea is to, extend the trading hours in a gradual manner. This is based on the feedback we received from the various stakeholder consultations we held over the last 9 months. And we've taken a bit of time to have these discussions because we wanted to cover all types of stakeholders, right. Not just the domestic ones, but even the foreign portfolio investors. And after a lot of discussions, they have only come up with this suggestion that we should not touch the cash equity segment, but it would be the right thing to do if we were to extend the trading hours for the equity derivative segment. So for a start, we are looking at a session from 6 p.m. to 9 p.m. India time, where we will offer index options and futures. Okay. That's the proposal for which we have requested for approval.
So to begin with, it is only index, future and options, and after that equity consideration might be there, but that may happen in a later stage.
No, right now we are not even thinking about equity because almost all the stakeholders have said that given that there is a T+1 settlement framework in place today, the timelines are too challenging for us to consider extension of trading time for cash equities. So that's not on the table right now for discussion. Also, the overwhelming feedback seems to be that equity derivatives is the right thing to do for extension of trading hours.
Help us understand what was the rationale behind this 6 to 9 p.m. move, because what we were hearing before was that the trading hours might be extended for 2 hours, meaning till 5:30 p.m. So is that proposal still on the table?
Well, that is not at the moment being considered for various reasons. One, people felt that when the US opens, that's when we get some global cues which tend to impact the Indian market, just like they impact many other markets as well. So it's important to be open when the US opens. That's why 6 p.m. to 9 p.m. And a mere extension up to 5 p.m. or 5:30 p.m. might not have solved that need. Secondly, I think, to answer your question, the trades of the evening session will be reckoned together with the following trading day. So these trades will be reckoned together with the next day and settled in due course in line with the process for the next day. So that's also, something where we are trying to make it as seamless as possible for all the market participants.
Well, shifting focus then, in a breather for IT hardware business, ET now has learned that the Import Management System portal, which will be managed by the Directorate General of Foreign Trade, will go live by the start of November, which is a month later than what was earlier expected. My colleague Sumita Karir is here with more details on this. Sumita, take it away.
Indian government's import management system, or a portal for submission of licenses for importing electronics including PCs and laptops, will be up by November 1st. Sources have confirmed to ET now. What this also means is that import restrictions are likely to get loosened and eased, and there won't be any immediate restrictions on imports, which is a major relief to global electronics manufacturing brands. Now, with this import mechanism, India will look at regulating inbound shipments of such products. Now, DGFT, remember, announced this policy on putting curbs on imports of laptops and PCs in August. That was aimed to ensure that only trusted hardwares and systems enter India and to reduce dependence on imports and, of course, boost local manufacturing. So what will the new import management system be like? Now, import authorization will be given to companies on the basis of a few parameters, like import value of previous year or an average of the past 3 years and import quantity. In fact, companies will not be asked to import less, and there could be a possibility that these licenses will be issued in just a few days flat, 2 days flat, and the website will have minimal manual intervention to allay fears of any complications. Several meetings with industry stakeholders have happened regarding this with the government, where their grievances have been heard regarding setting up of their manufacturing and immediate impact of on electronics items. Now, one such meeting with stakeholders and government is scheduled to take place. Remember, nearly 73% of India's total laptop imports in the first 3 quarters of 2022 came from China, according to reports, which the government, as we understand, wants to lessen its dependence on. Remember, to supplement this, a policy move to boost manufacturing was also introduced via PLI 2.0 scheme for IT and hardware, for which 40 companies have applied. And of these 40 applications, 30 to 33 companies will get clearance.
All right, thanks so much, Sumita, for taking us through that and breaking that down for us to understand better. Now, India's largest airline, Indigo, is planning massive expansion overseas. In addition to the newly launched international routes, the airline is planning to launch new flights to Geneva as well as Rome through its Airbus fleet. ET Now's Sumit Chaturvedi joins us with more details on this. Good morning, Sumit. Take it away.
At a time there are troubles with the CASA and other airlines in India, Indigo is going ahead with its expansion, especially on the global routes. What we know is that very soon Indigo will start flights to around 6 more global destinations. Majority of them are in Europe and Asia. Indigo will connect India to hubs in Europe, including in Rome, in Geneva. Also in Asia, Indigo will start more flights to China and South Korea in Seoul also. So that is the plan so far of the India's largest airline. It has recently announced flights and connecting India to Almaty in Kazakhstan, also Jakarta in Indonesia and Nairobi in Kenya. It is flying to currently 32 global destinations so far. What is it going to benefit Indigo is A321 XLR. That is the plane which it's going to use to fly to these destinations. Clearly a good overall festival season is coming, year-end season is coming, and what better time than this to start global expansion?
Well, thanks, Sumit, for taking that and breaking that down for us. But a stock that's going to be in focus today is going to be Tata Steel, because Moody's Investor Service has upgraded Tata Steel's long-term rating from Baa3 to Ba1, citing expectations of improved profits and debt reduction efforts. Moody's has also raised its outlook to positive from stable, citing confidence in Tata Steel's credit profile and robust market position in India. The rating reflects improvement in European ops, and they say that the key improvement in Europe will also aid the business going ahead. They say that they see improvement in the UK cost structure of the company, and better performing Dutch business. The Dutch business of the company will ensure a solid credit profile for the company. So on the back of that, this upgrade coming in for Tata Steel from Moody's Investor Service. But moving on then, Union Minister Hardeep Singh Puri unveiled India's hydrogen fuel cell buses in Delhi. These zero-emission buses harness hydrogen and air to generate electricity, reducing environmental impact. During the event, my colleague Prakash Priyadarshi caught up with Rajendra Petkar, who's the president and CTO of Tata Motors, to know more about these buses. Listen in to an excerpt of the conversation they had.
This is the bus which is fitted with the hydrogen fuel cell technology. In the hydrogen fuel cell, you use the hydrogen as a source of the energy, that's the input energy. Combine that with the oxygen, and both put together you generate the electricity, store the electricity in the battery which is on the board, and then use that electric energy to propel the wheels. So this is a zero emission technology vehicle. Now beside the fuel cell technology per se, there is a lot of other technology in terms of the hydrogen storage, in terms of a safety system, in terms of the telematics unit, in terms of the overall intelligent transport system which is fitted on the bus. Lots of focus as far as the vehicle operation is concerned, the interior, the roominess, and the passenger comfort is concerned. So this is the next generation bus, which is definitely a zero emission, but also comes with lots of other technical features which are packaged to deliver the superior consumer experience.
But the cost is something which will decide the future of such kind of buses. Give us some details about the cost involved as compared to diesel fuel buses.
Yeah, so as far as the diesel fuel buses are concerned, those have been there for more than 100 years in the market, and therefore the diesel technology has got perfected in terms of the scale, in terms of technology maturation, and in terms of the availability of a diesel as a fuel. When it comes to the hydrogen fuel cell, these are the very first two buses which have been today flag off at the hands of the Honorable Minister, and the technology need to now further get into the scale mode in terms of technology maturity, in terms of the investment which the OEMs need to make, the investment which the vendor ecosystem need to make, and also from the hydrogen infrastructure point of view, we also need lots of investment that must happen in the generation and the distribution of hydrogen.
Well, let's get a move on then and take a look at other stocks that could be in focus today. And Avas Financiers and Venus Pipes could be in focus after optimistic commentary coming in from their management meets. Winnie is joining in to take you through all the highlights of the meetings. And good morning, Winnie. Break it down for us.
Good morning, and absolutely, let's start with Avas Financiers and the commentary that has come in from the management meet. Now, Nirmal Bang has mentioned in its note that the disbursement what the company highlighted in terms of June 2023, that is normalized in June as well as July 2023. They expect to deliver AUM growth of 20 to 25% in FY24. And then that the competitive intensity remains high in housing loan, but non-housing loan portfolio, the share is expected to expand to 35%, driven by the MSME lending. Other than that, the spreads are to be maintained at 5%, and the OPEX remains at elevated levels as the company is investing in the franchisees as well. Operating leverage is to kick off in by FY25, and stable asset quality trends is what we're expecting for Avas Financiers. So a bit of a positive commentary coming in on that front, but Venus Pipes too also on the back of the commentary. Now, Nuvama in its note is highlighting about the management commentary, talking about Venus Pipe being on track for further capacity addition beyond the 33.6 KTPA for internal accruals to drive the growth beyond FY26 as well. Current capacity utilization is to rise on the back of government's ADD, that is on a duty on the imports, as well as the push for the BIS certificate product as well. New sales ahead is for the domestic and European market is to provide growth push for the company in terms of Venus Pipes, as well as in terms of direct sales. Backward integration and large diameter pipes are going to be the key focus areas for the company, and they have been focusing on improving their exports with focus on Europe, Africa, USA markets. So obviously that expansion and focus is going to be further increasing in these markets, and Venus Pipes already has an order book of around 200 crores translating and to an order visibility of for around 100 days as well. So let's keep an eye on both these stocks on the back of management meet.
All right, Winnie, thanks so much for taking us through that. Now, Avas Financiers and Venus Pipes, two potential buzzers and, the stocks in focus in trade today. With that, let's slip into a very short break. But when we come back, we will take you through all the potential buzzers and also the stocks that brokerages are keeping on their radar. So stay tuned to ET Now. Hi there, welcome back, and as promised before the break, let me take you through a list of all the stocks that could be potential buzzers in today's trading session. And let's start with a stock that saw some of the sharpest cuts coming in alone in yesterday's trading session, and that is Delta Corp. Now, Ashish Kacholia has sold 15 lakh shares in the company, and that up to roughly 0.5% stake. Now, this comes in after Delta Corp's GST liability has been added to 17,000 crore after it received notices from the GST intelligence in Hyderabad. The stock was 18.5% down yesterday, 18.4% cuts as you can see on your screen. Let's see if the stock manages to recover in today's trading session, but looks largely unlikely. Followed by that, Religare Enterprises will also be in focus. Now, the board supports the open offer proposed by the Berman Group, and after completion of the open offer, the board will appoint the new management team. Now, the stock was down 6.8% yesterday. Let's see if after this news flow, the stock sees any recovery in today's trading session. Century Textiles, another stock that could be a potential buzzer. It has launched projects in Bangalore worth 3,000 crore potential revenue. So, another stock in focus. Century Ply, the SEZ facility in Gabon, partially resumes operations. Followed by that, Vishnu Prakash Punglia will also be another stock in focus because it has reported its Q1 numbers. Revenue has come up 49% at 278 crore rupees, and profit after tax is also up 50% at that 16 crore rupee level. And lastly, you've also got Mankind Pharma. This could also be in focus today because commercial operations with respect to its pharmaceutical formulations has commenced at the company's newly set up plant in Udaipur, which is in Rajasthan. So, all of these stocks keep an eye out on because these could be potential buzzers in today's trading session. Well, let's get a move on then. And Nuvama Wealth, formerly known as Edelweiss Securities, will be listed on the bourses today with an expected market cap of over 8,700 crore rupees. Sharad is here with all of those details. Sharad, take it away.
Well, yes, in focus we are having Nuvama Wealth, and the company is expected to be listed tomorrow, which is September 26, and importantly on 2nd June the company was demerged from Edelweiss Financial Services. Now, important thing is we have done a peer analysis where we have actually come up with market cap is expected to come at roughly 8,721 crore rupees for the company on the listing based on the peer valuations and the averages we have taken. For FY24, if you look at the peers, Anand Rathi is trading at 31 times, it's a 12-month forward P of for FY24, and for IIFL Wealth 361 also it's trading at 23 times. Now, importantly, post demerger, the shareholding PAG, which is the private equity fund, will have roughly 56% stake. Edelweiss will have 14%, and the shareholders of Edelweiss, they will be having roughly 30% stake. Now, apart from this also, if you look at the wealth management, the peer analysis, over here Nuvama Wealth is having assets of roughly 2.5 lakh crore rupees, while IIFL Wealth is coming close second with almost 2.2 lakh crores. Also, if you look at the clients, roughly 11 lakh clients are there in Nuvama, and in terms of families, in Anand Rathi, it stands at roughly 8,352 families. Also, importantly, what lies ahead for Edelweiss, that is what the street is also seeing over here. They are expecting to continuously hold the portfolio of 7 businesses going ahead, and the demerger move will also unlock value for the shareholders. Now, also it has been seen providing capital for the Edelweiss Financial Services arm for the future investments, and at a group level, the debt levels will also come down.
Well, thanks so much, Sharad, for taking us through that. Now, let me take you through a bunch of brokerage notes that we've been getting for you this morning, and let's take a look at all the stocks that these brokerages are keeping on their radar. Starting with KEI Industries, that's on Prabhudas Leeladhar's radar. Now, the brokerage has upgraded this stock to buy from hold and has hiked the target price to 2,900 rupees versus 2,319 rupees. So, a significant bump up coming over there. They say that the diverse product portfolio and de-risking are long-term triggers. The company is scaling up distribution network at 7 to 8% per annum, and healthy balance sheet with net cash of 400 crore seems to be strong. They also say that the strong order book of 3,570 crore across businesses will aid this stock going ahead. So, that's the view that Prabhudas Leeladhar has on KEI Industries. Let's take a move on and then let's look at what Jefferies is tracking this morning, and they have electronic manufacturing companies on their radar as well. And well, they've been talking about two stocks. They've mentioned Dixon Tech as well as Amber Enterprises. For Dixon, they have maintained a hold with a target price of 5,050 rupees. For Amber Enterprises, they have maintained a buy with a target price of 3,740 rupees. Well, Jefferies believes that both of these stocks are key plays on the Indian indigenization, and vary in biz models will also help both these stocks going ahead. For Dixon Tech, they are pointing out diverse revenue, lower margin due to the OEM mix, higher capex and working capital and asset light balance sheet. They're saying all of these factors could aid the stock going ahead. And followed by that, Amber Enterprises also, they're focusing on the components, AC components mainly, and backward integration that has aided margins. So, well, Jefferies is keeping both of these stocks on their radar, that Dixon Tech as well as Amber Enterprises. Lastly, let's take a look at what Spark Capital is keeping on their radar, and that is PB Fintech. The view coming in from Spark Capital is they have initiated a reduced rating and at a target price of 700 rupees for this stock, which is PB Fintech. They say that the revenue potential remains substantial for this stock. Advertisements, branding costs and sales model will impact profitability. Well, they say that the key to profitability is health insurance for this company, and decline in online traction to impact the profitability as well. They're also seeing some steep valuations for this company at 45 times their FY27 estimate of the core PAT, which is the profit after tax. So, well, on the basis of all of this, Spark Capital has a reduced rating on PB Fintech with a target of 700 rupees. Well, with that, I'm afraid we're completely out of time on this edition of Market Cafe. Thanks so much for watching, and while I bid you goodbye, you don't go anywhere. You stay tuned to the channel because the market will take all the action ahead. So keep watching ET Now.